Mr. Bansali, tell us more about KESH King as a brand and what is the rationale and what is the synergy this brand brings on the table for you?
It's a very interesting category. It is in the hair and scalp care business, and there is a huge need gap for the consumer. So we identified this as a great category, and this KESH King has built up a good business over a period. And we feel that this is a very good opportunity. There has been a lot of synergy in terms of the distribution also. And in the oil segment, we are already present there with the therapeutic oil and also with 7 oils in one. So overall oil business will get a good boost with this acquisition. That has been the rationale.
Mr. Bansali, there are mixed opinions on the valuations of the deal. Tell us your rationale for the 5.5 times sales valuation for KESH King.
If you look at, yes, because the existing turnover of KESH King is around 300 crore. And so if you convert that in terms of the multiple, it comes to 5.5 around for valuation. But if you look at, for that matter, for any FMCG business, it would be around that. And it's not only the turnover which matters. If you look at the margins, it has very superior margins that even Emami's margins as well. So while it is a big ticket item, but it is still a very good acquisition for us, and we are hopeful to make a very reasonable growth from this category.
Mr. Bansali, morning. So what about the funding for the acquisition? Would it be a mix of debt and equity, and by how much quantum?
As on 31st March 2005, we had on our balance sheet itself surplus funds of 800 crore plus. And we would be utilizing this surplus fund, and then would be a mix of debt also. If you look at our profitability, last year we had a profit after tax of around 487 crores. So if add on to that the current year's profit also, I think it's a very reasonable debt which we are taking on our balance sheet. And I think it's a highly properly geared, and the debt equity would be much less than even the 1:1.
Future strategy for the hair oil market where the Navratna hair oil has just 5% market share. Now with KESH King in your kitty, what is the targeted market share in the hair oil market?
They are in the niche categories. If you look at therapeutic or cooling oil category, where our Navratna has more than 60% market share in fact. And in this problem solution category, hair and scalp care business for KESH King, the market share is about around 30 to 35% kind of market share they have. So we intend to grow these categories, and in both these categories, the penetration levels are still very low. So that will give a good boost to us.
Okay, and since you talked about raising funds, can you just give us a picture of the debt equity situation actually after you've done whatever fundraising you need to do?
Currently, there has been no debt on. There has been on the net basis, there is a surplus fund of around 800 crore on 31st March 2015, and we would utilize these funds along with some debts which would be taken up. So on the initial stage, despite this, there will be a debt equity ratio of less than 1, and at the end of the year, it would be much lesser. The debt equity would be much lesser.
What's the impact on Emami financials though, Mr. Bansali, post the acquisition? What kind of earnings growth expected from next year onwards?
The KESH King, as over the last 3 years, has grown as a CAGR of 61%, and we expect good growth. In fact, a modest growth even of 10 to 15% will give a good fillip to us. And on standalone basis, FMCG business of Emami is expected to grow around 17-18% this year in 2015-16 minimum. So both combined together, we can very well expect a growth of around 25 to 27% on the top line. And EBITDA is also expected to grow in the same region.
Okay, demand outlook from the rural segment as monsoon may really disappoint?
We have seen those reports, and we are also somewhat disappointed with the kind of reports which are generating. But we have not felt very significant impact on the field till date. But if there is a seasonal irritation as it is expected, there could be a little impact.
Mr. Bhansali, do you think the 1700 crore rupee valuation for KESH King is a little bit high, because there's mixed opinion from analysts as well as market participants on the same?
We have done our calculations, and it's really not an expensive proposition. We expect our APS, it should be APS accretive from second to third year kind of. So we felt that we have whatever consideration we have paid is very reasonable.